a great question, and a question I get asked quite often. Many people actually don't know how much they need to retire. They often talk about how much money they make today, how much take-home pay they bring in after taxes, and wonder, how much do we actually need? So what we do is we actually start off by figuring out where they are today, what they have invested today, how much return or what is their rate of return that they're getting on their money, and then we work towards what is possible down the road. Some individuals like to tell me what they would like to have on a monthly basis or an annual basis during retirement. And so in those particular instances, we actually can work backwards, see what they need or want at 65 or 67, whenever they decide to retire, figure out where they are today, and then we sit down and figure out that roadmap. What do we need to invest in, at what type of risk to get you where you need to be at retirement? I guess the quick answer to that question is no. One of the benefits of dealing with someone like myself is that every time I sit down with an individual, I specifically tailor their investments to exactly their needs. So there really is no preset outline for investment. What I like to do is figure out who the person is that's sitting across the table from me, what their goals are, and then we structure a portfolio to meet those goals, whether it be investing in low risk investments, medium, high risk, what types of return they need. Everyone is different. Everyone needs certain amounts of money. Everyone wants to live a different lifestyle in retirement. There really is no one, recipe for success. So what we try to do is design a portfolio that is right for you. Absolutely. When you look at our market makes up approximately 3% of the world's wealth. And when you look at our markets, half of our market is invested in things such as commodities and mining and oil. So I think to broadly diversify or have a diversified portfolio, you must look outside of Canada for investment purposes. And if you look at the way the markets are trending over the last little while, it's no coincidence that when you look at a Canadian mutual fund, something like 40% of the money that they invest actually is outside of Canada. So right now, with our markets the way they are, being unfortunately as small as our market is here in Canada, we have no choice but to look outside of Canada to gain exposure to other sectors of the economy, other areas, other countries, to be able to be properly diversified. And I think if you can do this, that is the recipe for a good portfolio. Again, I think everybody's different. Some people like to review their portfolio once a year, once every RSP season, a couple times a year. I think that really is not what matters. What matters most, in my opinion, is how often is your investment advisor looking at your portfolio. In my business, I make it our business to look at everyone's portfolio at the very least every 6 to 8 weeks so that my clients feel confident that I'm watching. And I think that is so important, especially in a market that is so volatile today. And in my opinion, that volatility isn't going to change anytime soon. So I think it's important for investors not only to meet with their investment advisor at least once or even twice a year, but I think even more important for that investment advisor to keep tabs on every portfolio, keep tabs on your portfolio to make sure that they're watching, they see what's going on in the marketplace, and if changes needed to be made, that they will advise you and make those changes.